Welcome everyone. I want to welcome everyone back to another episode of Forex Tech Magazine. Welcome. Want to get into this today. Before we get too far along, just want to go ahead and issue our disclaimer. And disclaimer is this: is that none of the information that we share with you today or have shared with you in the past or plan to share with you in the future should be considered investment or trading advice. This is solely for the purpose of entertainment and educational purposes only, right? Remember that. Uh, the next thing, if you are seeking financial advice, we highly recommend that you seek the assistance of a licensed professional uh, in your area. Okay? Now that that's out of the way, let's get into this and let's talk about what went right, what went wrong on our trades from yesterday. And let's look at our trades from yesterday. And if you notice right here on our chart, we actually have a trade, two trades that's in progress. And these are trades that's left over from yesterday. Normally, I try to go ahead and just, if it hasn't hit or if it has or if it's in the red or whatever, I'll just go ahead and kill it, during that day or whatnot. But because this right here is a demo account, we want to kind of see how these things kind of play out a little bit. It's a good opportunity for us to kind of like learn just from watching this. And so those of you who haven't already had the opportunity to sign up for this software that we're using right now, which is the Smart Trader software, please take the opportunity, go to our link right in our channel, below our channel. It's the Smart Trader software, right? Go there, register. You don't have to download anything. You just have to register, give them like an email address, a username, and you can register there. And when you do, you have access to this really good software that you can use. We actually purchased the upgraded version of this that we're going to probably put in place and start really using a lot more next week when we do the live account. But for right now, we've been doing the demo account for the last about 30 days or so, just to kind of play around with it, get everybody familiar with it, and let everybody kind of like learn how this works. But like I said, we're going to switch over to the to actual money, and we're going to be actually using a lot more of the powerful tools that's inside this account. Right now, if you haven't been following along, right now we've just been playing around with this London Open strategy. I just kind of tweaking it. There's a lot of information out there on the internet about the London Open. Some of it good, some of it bad. We just been kind of just tweaking it a little bit here and there and see how we can make it kind of work for us. Okay. But if you look at this right here, right now, yesterday we opened up three positions. We did the Great Britain pound US dollar, Great Britain pound Japanese yen, and the Great Britain pound New Zealand dollar, right? And I got to tell you, all of them went positive, and then all of them went negative, right? I think that for the most part, only one of them hit the stop loss, right? Now let's look at that one real quick. I'm gonna get this out of the way. And as you can see right now, I'm just gonna leave this ticker right here up so that way you kind of see how the price is changing over the course of this this session here. I do anticipate though, however, and even though it looks like it's going close to my stop loss, I believe this thing will turn around and actually turn positive before we get out of here tonight. But I could be wrong, right? Not perfect. But that's the reason why we got stop losses there, right? Because we're not perfect, right? But let's look at this one first, which is the Great Britain pound Japanese yen, right? Let's look at this one first. Let's talk about this a little bit and to find out what went right, what went wrong, and how we could have possibly made this a more successful trade, if at all. Okay. Now, when we look at this one right here, remember when we're doing the London Open, we're focusing in on the 3 a.m. candle, right? And if you look right here, here's our 3 a.m. candle for Tuesday, October the 23rd, right? Now the black line right here is just a excuse me, a support line that we drew in, and we'll zoom out here in a minute so you can see that a little bit better. But the blue line is our entry buy, right? Our entry order. The green line is our take profit, and then of course the red line is our stop loss. Okay, and if you notice right here, what happened was that 3 a.m. we looked at where we were at within the market, because remember, we want to trade what the market is giving us right now at that moment, not what we anticipate the market to be doing, right? And based off of a number of factors, we determined that the market was starting an upward move, right? One of the reasons why is because one, is right here on this trend line, we had a really strong downturn, and then price pushed back up, right? And this same trend line was actually resistance prior, right? As you see, price came up, hit it, came back down, right, and then went back through it. Over here, price came down to it. It gave it support before it went back up and then came back down, right? And it's happened several times throughout. And so that gave us confidence that, hey, you know what? We had a significant trend line. I'm sorry, a significant support line. And this right here is a good place to enter because price should be moving up from here. So that gave us a little bit more confidence in our ability. Now, just because we have confidence in what we see doesn't necessarily mean that's what's going to happen, right? But the whole point of trading is that you want to trade with probability, right? And we got a higher probability of being successful. Those are the trades that you want to take versus the ones where you have a lower probability of being successful, right? So if you're in a situation where price is bouncing off a trend line, price is bouncing off of support, or it's touching support, I mean, those are more likely to U-turn. Price is more likely to U-turn at those areas of support and resistance than they are than if price is just kind of like just trucking along halfway in between, right? And so that gave us confidence to go in and say, hey, you know what? We'll put our stop loss below the low of the day, right? Which was right here at the 2 a.m. candle mark, right? And then, anticipation was that price would bounce off of this support right here and then continue on up to our take profit. And as you can see, we started out in that direction. It looked pretty good. It looks like, hey, I got to say, it looks like it was going to happen for us, right? But somewhere between it was going to happen for us, and now, right, price decided to take a U-turn and come back down. And a lot of this has to do with just the information in general that's coming out in the market today. There's a lot of information that comes out, not really so much on the economic calendar side, because we can look over here and see. And also, too, if you're not using your economic calendars, and I know that our site, everything we do is really kind of geared up to the technical analysis part of trading, but it is in your best interest to also be aware of fundamental developments that's happening in your currency pairs that you're trading, right? And here's the reason why. Because if you look at the charts, and I'm coming right back to this right here. If you look at your chart, you see these little candlesticks? You see these little markers right here? All these little markers right here are just visual representations of the information that was disseminated through, either economic disbursements of, information about, CPI, consumer price index, interest rates, any type of information that might have came out that kind of shocked the market, maybe something about oil, something about potential war, something, tensions in the Middle East or whatever, right? All these candlesticks these are just visual representations, right, of buyers and sellers, interpretation of that information, right? Some really good information comes out, right? People are going to start buying because they're going to get greedy. They're going to get like, oh man, I feel really good about this. I'm going to go ahead and I'm gonna start buying because that information that just came out seemed like it's really good and it's going to make this currency pair go up. If some negative information comes out, people are going to start selling. You're going to start seeing these candlesticks go down because people are scared because they're saying that, hey, you know what? Some really bad information came out, so I don't want to be in this pair anymore, right? So it's to your advantage, even though we trade technicals, right, to also be aware of, economic-wise, this calendar when information is going to be coming out. And the reason being is because you want to know if there's something that's really big that's coming down the pipeline, right? Because if something's big is coming down the pipeline, guess what? It can affect you, right? And I don't mean just in a positive way. It can affect you in a negative way as well, right? And so the more you're aware of what's happening in the marketplace, the more you kind of in tune with that, the better your trades are going to be, and hopefully the higher probability that you're going to be successful when you make a trade, right? And once again, that's what it's all about. It's about the probabilities of trying to put on a successful trade, right? And another thing that we want to do too is, always remember that when you trade with a stop loss, right? It's 3 things that you should have on every trade, right? You should have an entry for where you're going to get into the trade, right? You should have a take profit where you're going to get out of the trade, right? Once you're successful. And then you should have an exit strategy so that way if the trade goes bad that you'll be able to get out. Exit strategy A stop loss, that's your parachute, right? Just imagine if you're flying a airplane or a jet or whatever, and you're flying, and if something goes wrong, the engine fails, you get shot down or whatever, you want to have a way to bail out of that thing and be able to get back in another plane the next day, right? If you don't have a parachute, guess what's going to happen? You're going to get, when it plane crash, boom, you crashing with it, right? So same thing with your trades. 95% of this is just mental, right? Because guess what? I don't care who you are. Nobody knows what the market's going to do from day to day, right? It's a huge X factor. It's a gamble, right? Nobody knows, right? We can have an idea, right? And we can look at price and we can look at momentum swings, right? And say, okay, based off of the momentum swings, we feel like that this is what's going to happen. But the reality is nobody can really guarantee. If somebody could guarantee, if somebody actually knew what was going to happen moment for moment, day to day, guess what? They would not be talking to us, right? They'd be sitting somewhere on their island, somewhere on their private island, living a life, right? So the way that we protect ourselves and the way that we stay in this game over the long haul is that we are smart about our money management, right? That's where stop loss comes into play, because the one thing that we can control, the one thing that we have control over, right, is how much we're willing to risk on each trade, and how much we're willing to lose on each trade. So those things are defined parameters that we control. And so in order for us to be successful, we need to make sure that we're controlling that thing that we can control, that we have control over on each and every trade, right? And then the next thing we got to be able to be control over is our mental state. So that means that we cannot go out here and just start revenge trading, right? And if any of you guys have been trading for at least 30 days, you know exactly what I'm talking about when I say revenge trading, right?